Hello everyone. Today we'll be exploring the type of journal entries. There are various types of journal entries that can be posted in ERPNext. These include the general journal entry. This is an all-purpose entry for a variety of transactions such as expenses. At times, costs do not necessarily have to be accrued and can be posted directly. For example, telephone bills or travel allowance can be debited in the expense account and credited to the cash or bank account on payment. Crediting salaries. Salaries of employees can be credited through a journal entry. Intercompany journal entry. When there are transactions between a parent and subsidiary companies, sister companies, or companies belonging to the same group, you can make an intercompany journal entry. This type of entry facilitates recording financial transactions between related parties. Bank entry. This entry is made when payments are received or made through a bank account. For instance, payment of entertainment expenses through the company's bank account. Cash entry. A cash entry is similar to a bank entry, except money going into or out of a bank account is replaced by money going into or out of a cash account. When do you use it? When you receive cash from a customer or when you make payment to a supplier from the office drawer. Example: suppose you sold goods for Rs 5,000 and your customer pays you in cash. You will make a payment entry, choose mode of payment, cash, and then choose your cash account. This keeps you aware of how much money is with the firm at any given time. Credit card entry. Use a credit card entry if payments are received through a credit card. This entry keeps you well aware of all the credit card transactions all at once. When do you use it? When your firm pays a supplier with a credit card. When you receive payment from a customer through credit card. Example: you purchased office stationery of Rs 3,000 on credit card of your company. You will prepare a payment entry, enter mode of payment is credit card, and select your credit card account. This keeps your books clean and makes it simple to reconcile credit card bills in the future. Debit note. A debit note is created when goods are returned to a supplier. You can post a debit note directly from a purchase invoice. When returning goods, debit supplier account and credit purchase return account. This note means that the firm is requesting a refund or offsetting the value of returned goods against another invoice. Credit note. A credit note is sent to a customer where goods are being returned. A credit note serves as evidence that a customer is owed an adjustment or refund. When returning goods, debit sales return account and credit customer account. This note is generally prepared when the company must make a customer's payment for the returned products. Contra entry. A contra entry is prepared when the transaction is between the same company's cash and bank accounts. Example: cash to cash, bank to cash, cash to bank, or bank to cash. It can also be done between bank to bank. This entry is made to record internal fund transfers such as paying cash into a bank account or drawing cash from the bank. Excise entry. When buying items that have excise duty involved, this entry type captures the transaction on purchase, such as debit excise duty account and purchase account, credit supplier account, on sale, debit customer account, and credit sales account and excise duty account. Note: excise duty rules are country specific. Write-offs or bad debts. When an invoice becomes uncollectible, it is written off as a bad debt. Debit bad debts written off, and credit customer account. This account acknowledges that the company will not be paid the customer's due amount. Opening entry. Opening entries are applied to post balances when transitioning from another system to ERPNext. These entries record existing balances like outstanding bills or equity at the beginning of a financial period. Depreciation. Depreciation entries reflect the decrease in asset value over time. For instance, depreciating a computer over 5 years. Debit depreciation expense and credit asset account. This entry assists in spreading the cost of an asset over its useful life. Note: depreciation regulations can differ by region, so be sure to refer to relevant regulations. Exchange rate revaluation. If your accounts contain more than one currency, you might need to account for exchange rate movements. This entry assists in bringing the value of accounts up to date based on the current exchange rate.